Hi guys, welcome to today's video. With the earnings season wrapping up, today's video will be our first report of our Q3 earnings season market update. For our first report today, we'll be covering main players in the financial industry, namely JPM, Bank of America, Morgan Stanley, Citigroup, Goldman Sachs, and BlackRock. For each stock, I will show you a spreadsheet where I calculate my intrinsic value per share, and after that, I will do a short technical analysis on each stock. Before we begin, here's a quick disclaimer. Alright, let's get into it. First up, we have JPM, ticker JPM. JPM is one of the largest banks in the world and it was incorporated in Delaware, USA. Moving on to some number crunching, for JPM, I've used growth rates of 8%, 5% and 3% for years 1 to 5, year 6 to 10 and year 11 to 20 respectively. Combining this with a discount rate of about 7%, I've generated an intrinsic value per share of about $238, which is about 32% discount from their current market price. Taking a look at the JPM stock chart, you can see that there's a strong horizontal support level where the stock price has found support previously multiple times. There's also a trendline support here, which we can see where the stock price has found multiple support multiple times. However, there's a forming resistance level down here at about $172. With this trendline support and this strong resistance level, it looks like an ascending triangle chart pattern might be forming. And currently trading near the trendline support, this might be a good entry level if you are looking to enter JPM. Next, we have Bank of America, ticker BAC. Bank of America is another large bank in the US and it was incorporated in San Francisco. For Bank of America, I've used cash flow growth rates of the same as JPM, 8%, 5% and 3%, and combining this with a slightly higher discount rate of about 7.2%, I've generated an intrinsic value per share of $79, giving us a discount of about 44% from their current market price. Looking at the Bank of America technical chart, we can see that a previous resistance level has now become an area of support for the price action. So now we are back here at this support level and we can enter probably anywhere around this support level if you're looking to enter Bank of America. Moving on to our third stock, it is Morgan Stanley, ticker MS. Morgan Stanley is another household name in the financial industry with its headquarters located in Midtown Manhattan, New York City. Taking a look at Morgan Stanley's free cash flow projections, the analysts on the multiple financial websites that I actually looked at were a bit more bullish on Morgan Stanley. So I've used cash flow growth rates of 12%, 8% and 5% respectively for the three categories of cash flow growth rates. I've also used a discount rate of about 6% and this gives me a final intrinsic share value of about $96, which is about a 5% premium to their current market price of about $101. Looking at the Morgan Stanley chart, you can see that the price previously respected the 50 EMA, bouncing off it multiple times. However, now it has entered a range market, as we can see, where there is strong resistance and a strong support level. So we can see here that there has been multiple support levels here at about $96.80. And so if it comes down near to this level, we can probably enter Morgan Stanley around here. Our next stock is Citigroup, ticker C. Citigroup was formed by the merger of banking giant Citicorp and financial conglomerate Travelers Group in 1998. Moving on to Citigroup, for Citigroup I was a bit more conservative, so I went with cash flow projections of 6%, 4% and 2% for each category respectively, and combining with a growth rate of 6.5%, it gave me a final intrinsic value per share of about $153, which was a 60% discount from their current market price. And this big discount, we can take a look at it later in the technical portion. Taking a look at the Citibank chart, we can see that after the second stage in the market of an uptrend, it has entered a third stage, which is a range market or consolidation phase, and has recently broken through the support level and entered a stage 4, which is a decline phase. So looking at Citigroup, we do not know how far it's going to fall, but the next support level that I have highlighted here would be around $58.30. So this might be a potential area where the stock price might hold and find support because it has found support previously at that level. Our second to last stock is Goldman Sachs, ticker GS. Goldman Sachs is one of the world's most renowned banks and also has a very cool CEO in David Solomon. If you do not know what I'm talking about, you should go and check him out. For Goldman Sachs, analysts were also seemingly more bullish on them, so I went with more aggressive growth rates of 13%, 6.5% and 4%. Combining this with a discount rate of 5.2%, I generated an intrinsic value per share of $466.67, which was about a 15% discount from their current market price. For Goldman Sachs, looking at their chart, it looks like they have just entered a range market or consolidation phase, which is stage 3, after their stage 2 uptrend. Looking at the charts currently, there's a strong support level at about $376.75, where the price action has bounced off repeatedly in the past. If you would like to enter Goldman Sachs, maybe you could wait for the price to retrace to around this support level and look to enter there. Our last stock is BlackRock, ticker BLK. BlackRock is the current largest asset manager in the world with assets under management of $9.5 trillion. Moving on to BlackRock. For BlackRock, I use cash flow growth rates of 14%, 9% and 6%, and with a discount rate of about 8%, I generated a financial intrinsic value per share of about $873, which was about a 6% premium to their current market price. Looking at the BlackRock chart, we can see a very strong support level at $842, where the stock price has bounced off repeatedly previously. Looking at the current price of about $925, it is trading at a premium compared to their intrinsic value per share as mentioned previously. So we would like for it to retrace further down nearer to this support level, where we look to take entry maybe around there if we're interested in entering BlackRock. And that's all the stocks we have for report 1. Here's a summary table of all the stocks we've mentioned in this video, and you can pause to take a quick look. We'll be back with more intrinsic value market updates next week, and do let us know in the comment section down below what stocks you'd like to see in next week's episode. Please like, share and subscribe so that we can continue to bring you better content. Don't forget to join our free Telegram Signals channel in the description down below. And as always, may the markets be in your favour, and I'll catch you in the next one.